Welcome, everyone. Thank you for joining us today for the Southern Colorado Commercial Brokers Association second installment of our COVID-19 webinar series. My name is Chris Myers with Hoffman Lee Commercial Real Estate here in the Springs. I'm the 2020 board president of the SCCB, and I'm joined today with my co-host, Logan Harrison. Thanks for joining us today, Logan.
You bet. Thanks, Chris. My name is Logan Harrison with Thrive Commercial Partners. And today we've got an exciting event. We've got our, as Chris mentioned, our second installment of this webinar series. And we're going to be focusing today primarily on information as it relates to the PPP and EIDL loans and the tax treatment for that, as well as the property management trends and how tenants are responding during this COVID environment. So just before we jump in here, a couple of housekeeping items. If you have any questions, the chat feature has been disabled. There is a Q&A feature which you can click, and we ask that you submit your questions there. I'll be filtering those, reading through those, and we'll have those to present to our presenters towards the end of the webinar. We also ask that you keep your questions related to the current COVID pandemic and how it relates to the items that we're discussing today. Want to thank our SCCB members for helping put this webinar together, and I think from there, I think we can go ahead and jump in, and I'll go ahead and introduce Chris Blees with BiggsKofford. He's the president and managing director, and he's going to be talking to us about the PPP and EIDL loans. Also, want to let you know we've got our member, our SCCB member, Gosia Bikker, with us as well with MC Commercial. She's been in the management business now for 17, almost 20 years now. And so we're excited to hear what she's got to share with us. But without further ado, Chris, welcome to the webinar, and feel free to jump in. Thanks for joining us.
Yeah, thank you. So I think you guys have asked if I would start out by giving an overview of some of the financial tools and loan programs that are out that small businesses are getting to take advantage of here to help with their funding and survival. So I thought I would give a kind of a high level overview of a few different programs that exist, but then I'll dive into a little more detail on the PPP loan because as most people are aware, that's kind of the primary tool that has been used right now. So I'll give a few high-level comments around a couple of the other programs, and then I'll go through those rules, and then also try to give some specific things that may relate more to the real estate community, so that you guys can have some good ideas on that. Before I start, let me just also tell you that most of the information, I'm going to go through a lot of stuff and a lot of details, and people may or may not capture all of this, as I roll through things. I don't have anything to put up on the screen or presentation wise, but let me direct everyone to my website at BiggsKofford.com. And as soon as you log into our website, there is a red button that usually pops up on the lower left-hand corner of most browsers that you can click on. It'll take you to our resources page, and it's a COVID-19 resources page. And on that page, you'll find articles, you'll find tools and resources, links to the SBA's pronouncements, but also our articles may be the best place to go. We've really done a good job. I think we've done a good job of publishing, not just republishing or regurgitating the same information the SBA does, but really giving you some analysis and kind of boiling it down for the small business owner. That's been my primary objective during this whole crisis, is to stay on top of the new releases and send out more layman terms interpretation of what's going on. So I encourage everybody to look through those articles, and then we've got even some calculator tools, some Excel spreadsheets you can download, all kinds of different stuff that's on our website to make some of this a little bit easier to understand. And it's pretty complicated stuff. So let me just give you a real high level overview of what has happened here in the last couple months, and what the government has done to help with with some of the funding options. So the first thing that was done, people may not even remember this, but it was even before the end of March. There was a Family Leave Act that was passed, and that required employers to provide sick pay and time off for employees, obviously that may have contracted COVID, but also for those who are having to take care of family members. So that was the first thing that happened. And then along with that came a payroll tax credit. So there's an ability for you to claim a payroll tax credit, meaning you get a refund of your payroll taxes equal to the amount of salary that you had to pay somebody while they were out sick. So it was really a reimbursement for sick pay from the government just through your payroll taxes. So just that was the very first thing that happened. The second thing that happened then, and the most significant, is the CARES Act. And so the CARES Act was passed right at the end of March. And it does incorporate some of those features. There's some crossover with that Family Leave Act in a couple places, but that's not, I'm not going to get into those details. Some of the primary things that the CARES Act did besides the PPP loan, everyone knows the PPP loan. There's actually a ton of things in the CARES Act. It's about an 800-page act if you actually wanted to look at it. There's about 40 or 50 pages of that relates to the PPP loan. So that means there's somewhere around 750 pages of other stuff. Everything from airline industries and cruise lines and higher education funding and allocation to state and local governments and so on. A couple of things that benefit or impact small business owners besides the PPP loan, there's a few payroll tax elements to it. So one is an extension or expansion of the payroll tax credit program, and allowing people to get further relief and to essentially get reimbursed for salaries that are paid to employees if they were directly impacted. And you had to be qualified for these benefits, meaning that you had to have shown a downturn in revenues and so on. I guess what ended up happening is those programs, those payroll tax credit programs, sort of became underwhelming compared to the PPP loan. So while they're out there, and I guess in a world where there wouldn't be a PPP loan, we would be all talking to our clients, and we'd be working with small business owners on how to navigate these payroll tax credit programs. But the reality is that the PPP loan just overshadowed all of that. And so I don't know many business owners really that passed up on the PPP loan in lieu of these payroll tax credits. You did have to make a choice to either do one or the other. So you couldn't take advantage of the payroll tax credit program and also get a PPP loan. So given that the PPP loan is so much more favorable, everyone basically chose that route. And I don't know many small business owners that are participating in these payroll tax programs. There is one payroll tax program that is available, though, even with the PPP loan, and it's essentially just a deferral. So you can, if you want, defer your payroll tax payments. You can actually not make the remittance of your payroll taxes for employees, and you can defer them all the way until the end of this year and into 2021. So that's an option that's still available. A lot of people haven't even taken advantage of it, but it is basically just an interest-free loan. I think a lot of people are afraid to take advantage of it, frankly, because they don't want to get caught at the end of the year with a huge payroll tax balance due, and so they've they sort of passed up on taking advantage of that. But if you really are in a cash crunch, or if you have a business owner that really is in a super cash crunch, that is something they could do. Is they can automatically elect to to do that. Most of the payroll service companies, ADP and Paychex and those kinds of groups, should be able to help you navigate that payroll deferral process. So those are a couple of things that are out there. I'm going to mention one other thing that was also part of the CARES Act, specific to healthcare and physicians. So healthcare organizations, any healthcare organization that charged historically received charges from Medicare and Medicaid became automatically available to them for a credit from Health and Human Services, HHS. And those credits they're effectively grants. So it's not a loan program. It's an immediate grant program. And so anyone that has tenants or any business owners they work with that are in the healthcare industry will have probably just automatically received these payments. And there is a little bit of an overlap for what they can use that money for, along with the PPP loan. Most of our clients that are in healthcare are doing both. So they would have received these HHS payments in addition to applying for a PPP loan. So they're having to navigate the combination of those two. So those are a couple other things that are out there from the CARES Act. So diving into the PPP loan, let me just kind of give everybody a high-level overview, and I'll break it down into a couple different categories. So first is the loan amount itself and the application process. There is still available balance, by the way. So the initial funding of the PPP loan was chewed up. I think it was 10 days, maybe 12 days that the loan was available, and the first round of funding was chewed up. There was a few-day window in between before Congress passed the refill, or as they called it, the 3.5 or 2.5 or whatever version of the CARES Act that they added to the PPP loan balance. But that second round of funding is still available. I think last I checked, there's $100 and some billion of availability. So that's good news. At this point, my suspicion would be it's not going to run out because, if it hasn't been applied for at this point, I think it's probably good for the remainder. It does expire. Applications have to be made and funded by June 30th. So we've only got a month left, basically. So the loan amount is based on, and most people know these rules, but I'll just kind of rattle through them pretty quickly. The loan amount was based on 2.5 months of your payroll. So that was based on, for most businesses, it would have been 2019 payroll, divide by 12, multiply by 2.5. There are some exceptions to that, and the most notable is that any one individual employee is capped at $100,000. So payroll over that amount doesn't qualify for the loan amount, and then also going into the forgiveness process. A couple of things I want to point out that were some confusion, but also that people may still not quite fully understand the difference. That is with respect to contractors versus employees. So there was a lot of confusion in the way the law was written, even the way the SBA issued their rules and their application. And so it's not unusual that people were confused by this. But basically, let me phrase it to you this way. If you are an employer and you issue your employees a W-2, that's payroll. That's what you get to claim as your PPP loan. It's also what you then get to use to claim for your forgiveness process. If you employ people, but you employ them as a 1099 contractor, then they do not qualify as your employees. You cannot obtain a PPP loan based on 1099s that you issued to people. Instead, those individuals would have to apply for their own loan. And so anyone that is a 1099 recipient is deemed to be their own business, and therefore they would be subject to, or they would have the ability to obtain their own PPP loan. And I'll discuss essentially the sole proprietor rules. Each of those 1099 recipients is deemed to be a sole proprietor. So I'll talk about those in just a minute. And that can give you that, a sense of how they are dealt with. And it's really helpful if you just think of those as two different, completely different set of rules. The problem the SBA had was they combined it all into one big bucket, and it really confused people because people were trying to understand this combination of rules where 1099s and W-2s were referenced in the same line on the same form, and it really confused people. So the better way to think of it is you're either an employer with W-2s or you are a sole proprietor receiving a 1099, but don't think of both of those at the same time. So let me dive into the forgiveness rules real quick, and then I'll come back to the sole proprietor rules. So the forgiveness rules for a general employer, for someone who actually issues W-2s to people and has payroll, is that you have an 8-week period that begins the day you get your loan. And that 8-week period, you have to spend the money the loan money to have it to be forgiven. It has to be spent in 2 categories. One category being payroll costs, and the second category being essentially facility costs, rent, utilities, mortgage interest, or interest on loans. So let me talk through the payroll. So the payroll, same rules as for the loan amount, which is actual payroll, the actual salaries and wages to people, but it's capped at $100,000 per person, or at a rate of $100,000. So the way that works out for an 8-week period is, and the SBA has even acknowledged this dollar amount, it's $15,385. So basically you can pay somebody up to $15,385 in that 8-week period and claim that as part of your forgiveness. So a lot of people say, well, can I give my employees a bonus? Can I pay them in advance for future services? Can I pay them for past services? Can I pay commissions, et cetera, et cetera, et cetera? All of those questions, the answer is essentially, sure, you can do whatever, because the SBA has basically said, as long as that salary during the 8-week period doesn't exceed $15,385, we don't care for what period it counts. So that basically becomes the de facto cap on the payroll amount. A couple other pieces, though, that people maybe you forget about or don't realize that count toward payroll costs, and that is retirement payments and also health insurance, state unemployment as well, but that one tends to be pretty small and relative to total payroll. But the big ones for sure are retirement payments and health insurance. Retirement payments can provide a lot of flexibility. So at this point, there is no restriction on how much you can put into retirement payments, as long as it's within reason for what you might have otherwise paid at this time of year. So a big example would be a 2019 employer contribution to a profit sharing plan or to a pension plan. We've got clients that are making their entire 2019 contribution and even portions of their 2020 contributions all in the 8-week period. And so these could be substantial amounts of money going into retirement plans, and it all counts as payroll costs in your 8-week period. So that's a pretty big number for someone who has a plan. Now, the problem is you can't go create a pension plan just right now and use it in the 8-week period. It has to be a plan you already had in place. But those are a couple ways that people are helping meet those payroll requirements in the law. The second part is, again, in rent, utilities, and interest. The SBA has also said that includes personal property as well. The big one of that being vehicles. So any company that has a vehicle fleet, or even just an individual that has a leased vehicle, that would count as rent. And then interestingly, since you get to count the vehicle lease as rent, you get to count gas in the car as a utility. So that's an interesting interpretation that maybe some folks don't know. Interest on a vehicle loan would also count. So if you don't have a mortgage interest, you may think, well, I don't get that, but you do get interest on those vehicles. So those are some of the factors on the forgiveness rules. All of this is subject to a 75-25 rule, meaning you can't spend more than, or can't have qualified expenses more than 25% of the loan amount in those rent, utility, and interest category. The payroll costs, in other words, need to make up 75% of your forgiveness amount. So those are some overrides on that. And then there are a couple other restrictions that have to do with FTE counts, measuring your number of FTEs that you have during the 8-week period, comparing that to full-time equivalents that you had employed either at the beginning of the year or last year. And so again, there's a lot of detailed rules around that, and I'm not going to get into all of those detailed rules. You can go into, again, to those tools on our website, and we'll have a lot of just further description on all of those rules of forgiveness. So let me touch on the sole proprietor issues, because again, those are some unique ones for 1099 recipients. So there's two interesting things about this. First is the 1099 recipients are essentially supposed to take their 2019 Schedule C. So it's your net Schedule C after expenses that becomes the amount that you use both for your loan amount and then also for your forgiveness amount. So if you're a sole proprietor, you're a 1099 recipient, and you received $100,000 in 1099s, but you had $20,000 of other expenses on your Schedule C. So you have a net Schedule C of $80,000. That's the number that you use to determine your loan amount. And then also there's an automatic forgiveness based on that amount. So it's all based on 2019 numbers. You take your net Schedule C, divide by 12, multiply by 2.5, and that's your loan amount. Then when it comes to forgiveness, this is the interesting part. You just automatically get a forgiveness amount equal to 8 weeks worth of that same number. So you take your Schedule C, you divide by 52 weeks, multiply by 8 weeks, and you automatically get forgiven. And what's interesting is if you do that math comes out to 73.5% roughly of the loan amount. And so you basically get an automatic forgiveness of roughly 75% of your loan amount. You then can spend the remaining 25% on those rent, utilities, and interest numbers. And if that's a vehicle lease, or if it's actual real estate rent, then you can spend it on that. So those are the sort of interesting basic rules for sole proprietors. So last thing I wanted to do is just touch on some of the clarifications, the lessons that we've learned along the way, and then some of the things that are still pending or unanswered questions that we have. So in the very beginning, there were a whole lot of misinterpretations, everything from payroll being calculated incorrectly. Even the payroll companies, ADP even put out a report that was wrong in the very early days of this, of the loan application. Those have all been fixed, I think, at this point. Most of the banks know what they're doing and know how to process these loans if somebody is still looking to get a PPP loan processed. After the loan was issued, there were a couple of new things that came out. The sole proprietor rules were issued finally. Interestingly, those sole proprietor rules were issued about 2 days before the money ran out. So unfortunately, a lot of sole proprietors didn't get their applications in because nobody knew how to process them until the second round of funding. There's been a lot of talk about what we call the SBA shaming program, where they've been shaming people about whether they should have or should have not received the loan. They set up a couple, I call them fake deadlines, of you can return the money and nothing bad will happen to you, but they didn't really define what that meant. And they didn't really define whether or not you should have had the loan or didn't have the loan. So we had a lot of clients worried about this, wondering whether they should return their loan amounts and so on. They finally released regulations that said, essentially, if you borrowed under $2 million, you're deemed to have been necessary to have borrowed the money. So if you have an under $2 million amount, you have an automatic need for the money, and you don't have to worry about having to return it. So that's a good clarification on that. The forgiveness rules were just released last week. So the forgiveness rules and a lot of the details around those added some clarity on some things. and gave a little more specific, in most cases, made things more lenient. So we have good articles on that on our website if you want to read some of the new forgiveness rules that were released last week, and look at some of those clarifications. So where we stand today, there's still a few things that are pending. One, which is the banks are just now learning how to actually process these forgiveness applications. So those rules were just released on Friday. And so the banks are just now starting to figure out how to set up their forgiveness mechanisms, which is probably okay, because I don't think many people have hit the end of their 8-week window yet. Most of those forgiveness applications will start to get processed really in earnest starting in July, because there's still some rules that you can reemploy people by June 30, have them count toward your FTE calculations and so on. So I would guess that for the most part, banks aren't going to really start processing those forgiveness applications until into July and forward. And they have until the end of the year. Everyone has until the end of the year to get their forgiveness applications processed. There are a couple rules that are pending, and there are some changes that are potential that are in Congress right now. There's at least 3 or 4 different versions of a bill that's on the Senate or in the House as we speak. And those would extend the 8-week period. Some of them talk about extending it upwards of a 12-week or a 16-week period. And then there's even some talk about making the 75-25 rule go away. But again, all of that is just talk at this point. So unless you happen to know Nancy Pelosi or Senator, a senator that you can call, I don't know how we can predict what's going to happen there, but that's some things that are outstanding. A lot of that's being driven by industry groups, specifically restaurants. Restaurants have not been treated well with this program, and the forgiveness rules for restaurants have been really difficult. So I would suspect that at a minimum there may be some changes in the rules that are going to give some relief to some of the hardest hit industries like retail and restaurants, and which I know many of us have tenants that fit into those categories. So that's those are some of the things that we're expecting, and we'll be sending releases of that information out. In fact, I just sent an email, a mass email out. If you want to get on our email distribution list, again, you can sign up for that on our website and get our regular articles that release all this information. So that is 2.5 months worth of information in 24 minutes. So I'm sure that's like a fire hose and then some. But I'm happy to take questions at the end, and I guess in the meantime we'll hear some thoughts from Gosia. So.
Great, yeah, thanks so much, Chris, and I imagine that this is, like most industries, changing on a weekly basis. So we look forward to checking in with you and staying on top of this. So Gosia, one of our SCCB board members, is also joining us. And Gosia, what can you tell us about what you're seeing in the property management world?
Thanks, Logan. Well, unfortunately, I can probably take 8 hours and not 24 minutes to tell you what's been happening over the past couple of months, but I'll try to do my best to be as quick as I can. Again, my name is Gosia Bikker. I'm with MC Commercial Real Estate. I've been with MC in Colorado Springs for about going on 8 years now. I personally manage a portfolio of about 1 million square feet of retail, office, and industrial space. But the information that I will be sharing with you today, it's not only based on my portfolio and what I am seeing in my portfolio, but I've got some great colleagues in the industry here locally that I was able to talk to and pick their brain on what they are seeing. So I want to say thank you to Tom Britta and Kathy Manchester from Cushman & Wakefield, who shared information on office market with me. Jeb Brewster with Griffith's Blessings, who was very helpful when it came to retail properties, and David Hewitt with Olive Real Estate Group, who gave me a little bit of insight on all of the types of properties and general overview of what he is seeing. So combined between all of us, The information I'm going to be sharing is based on about 11 million square feet of commercial real estate here in Colorado Springs area and across about 120 properties. I'm going to split my presentation to 3 segments. I will be talking about tenant relations, a little bit of financial impact, and facilities maintenance on how it all went on. So it's been really intriguing, I'm sure, for all of us to watch how all of this went down. My first call from a tenant concerned about what may happen and what we're going to do with rent was on March 16th, followed by force majeure letter from Subway on March 17th. So it started happening mid-March on the retail properties when tenants started to be concerned, hey, what's going to happen to us? But it started a little bit sooner with what we had to do as property manager on office properties, because basically from the beginning of March, by mid-March, we've already had to be ordering extra cleaning in our office properties because of the shared common areas, posting additional signage, and constantly communicating with our tenants on what we are doing. Throughout this time and starting really mid-March, as all of us property managers been constantly communicating with tenants, sending any kind of piece of information we could get on the financial help available from the government, any programs we know of. And really, it was a tough situation because we wanted to help, but we didn't know really how we could help, and wanted to do the best to deliver as much information to our tenants as we possibly can to make sure that they take advantage of the programs available to them versus relying on the landlords to provide assistance on rent. As the calls started to roll in from tenants asking for assistance, and mostly those calls were coming in from our retail tenants, some landlords jumped in immediately and wanted to help and offer some kind of assistance. Other landlords sat back and watched and took a little bit more time before deciding exactly what they're going to do. Regardless of what the situation was, we knew that we will be able to provide some assistance to tenants. Just in some instances, we weren't sure exactly what it's going to be until early April. So beginning of April, we pretty much had all of our landlords on board, willing to provide some kind of assistance, but that assistance was being provided based on different criteria. So the more sophisticated or the larger the landlord, the requirements before any kind of rent assistance was being offered was larger. So for example, financial statements for the entire year of 2019 by month were being requested, and financial statements for the beginning of 2020 were requested, just so landlords could compare what's exactly happening with their businesses. Also, a proof that tenants have applied for government assistance was required, and when possible for the businesses that were able to stay open, they were being asked, what are you doing as a business owner to continue to make income and get you through this tough time? And as the time went by, those requirements from the larger landlords kind of softened up a little bit, and landlords weren't as strict where they needed the full package of information. But it took time for tenants to put it together, and especially if they didn't have a professional company doing their bookkeeping, their accounting, it took them some time to put the information that we were asking for together. As we've gone through this process, we've noticed that some of our tenants were better prepared for hard times than others. Specifically, we've noticed that our medical tenants, other than dental offices, basically have gone through this just fine without any additional requests for assistance. But again, retail tenants, general retail tenants, specifically restaurants, nail salons, hair salons, were the most affected by this and needed the most help. The biggest challenge while dealing with tenants over this process was to explain to them that the assistance that's going to be provided by the landlords is not going to be rent forgiveness, that it's going to be a rent deferral, and that's going to have to be repaid later on at a later date. And several tenants were very disappointed. Several tenants felt that, you know, they didn't deserve for COVID to happen, and landlords have big, deep pockets, and landlords need to help tenants when tenants are in need. So it was tough, and it is still till today really difficult to explain to them, hey, you're going to have to repay this. You know, if you need to repay it in the next few months or next year, somehow this is a loan that the landlord is giving you and you're going to have to repay. And with that being said, as managers, we had to take very personal approach to dealing with each client and their portfolio and with each individual tenant and their business type. And depending on what business type they were, we've worked out individual agreements with them. There is some logic and consistency throughout what rent assistance was being offered, but it was to be kept confidential, and it was, you know, for that specific tenant depending on their personal and financial situation. And dealing through that, you know, a lot of tenants that applied for government grants found that process very difficult. And hearing from Chris and what he had to say, no wonder. It sounds like it was very confusing. I feel that our tenants were rushed to apply. Not all of them were able to put together the information the way it should have been put together. The ones that had professional companies or CPA offices applying for them have done much better than the ones that took it up to themselves and tried to do their best by applying. And one example that I have, one of my restaurant owners forgot to add tips, their waitstaff tips to the salaries or the payroll, and therefore she only got the benefit of the loan of just the base pay, where we all know how waitstaff relies on tips as their income. So they've missed out, and I'm sure that there are a bunch of other tenants that just did not file their paperwork correctly and missed out on some good money. When it came to deferring rents, there were a few different ways of how landlords handled it. Most of the time, the rent that is being deferred is going to be split over 6, 9, or 12 months in equal amounts, and it's going to be tacked on the lease payments starting anywhere from as early as July 1 of this year, August, September. I do have some that were deferred all the way until 2021, and that's when they will begin. What was difficult with COVID and COVID's timing for commercial property managers also was 2019 CAM reconciliations. So 2019 or any CAM reconciliations for the previous year are usually done beginning of the following year, and usually by March 31st we have them all done. So when tenants received statements for April for their April rent, they also received bills for their CAM reconciliations from 2019, and they were not happy to see that. Some of them felt it was personal vendetta against them, that now on top of everything else happening, we're passing on 2019 CAM reconciliations. But majority of the landlords are willing to work with their tenants. And again, this is more so in relation to retail tenants than maybe office tenants, but all landlords understand that we are all in this together, and if we have to split those CAM reconciliation payments or defer them to even fourth quarter of this year, that's being done, and tenants seem to be somewhat okay with it. In few very rare cases where our clients don't have any debt on the property, the rents were actually forgiven instead of being deferred. But out of all of the properties that we talked about, 99.9% landlords have deferred their rents versus forgiving their rents. Another way of dealing with this deferred rent that landlords used as one of the tools was extending tenant leases in exchange for deferred rent. In my portfolio, very, very early on, few lucky tenants that inquired about rent deferrals early on were able to get the great benefit of extending their lease. If they got a rent deferral for April and May, they were able to extend their lease, by 2 months. As the time went by, landlords were not so willing to give away free rent anymore. So just recently, last week, I had a tenant who reached out and wanted some assistance with June rent after already receiving April and May rent, and he was being offered 6-month lease extension in exchange for a half of base rent that is being deferred. And I guess that's another important piece of information. When I talk about rent deferrals, I'm only talking about the base rent. So majority of leases in Colorado Springs area are triple net leases. So regardless what kind of base rent deferral was offered, tenants still have to pay their operating expenses for both months, April and May. And any rent deferrals that were given to them were only on the minimum rent or the base rent amount. Taking a look at the rent deferrals that were given to tenants for April and May, over my portfolio, and again, this is mostly has to do with retail, the rent deferrals account for about 4% of budgeted 2020 rent and CAM income. So the amount is not huge. Again, it averaged out to about 4%, but we are hoping to have that amount deferred at some point later on. And with the rent deferrals, another thing that keeps us managers busy is that for any kind of a rent deferral deal that is being worked with the tenant, we have to either ourselves or participate and assist attorneys in creating lease amendments to memorize of how these rent deferrals were dealt with. So you can imagine, having 50 tenants where you have to extend their lease for 2 months and create a lease amendment and have tenants execute it and have landlords execute it. It just creates a lot of work. Additional work also is passed on our accounting departments because any landlords that is deferring rent now wants to have the ability to track that rent as it being repaid. So we have to change the way we charge tenants rents and set up additional charge codes to keep track of these deferred rents, so we can also show our clients on income statements basically a line item that shows how these rents are being repaid. Couple of other things that we are doing is we are working with tenants that have lease expirations happening soon here in the next couple of months. They're not really certain that they want to extend their lease for a longer period of time, especially businesses that were working on really low profit margins. We're watching to see if they're going to make it or not. So what we've been doing, just to buy us a little bit more time, instead of letting our tenants be on a month-to-month basis, we are also doing short-term renewals. So we will do a 6-month renewal, for example, to just give us a little bit more time to figure out how we feel about the market. And honestly, that's not something that I would recommend to do, but I don't know that sometimes in some cases we have that choice. So we're just trying to do the best to show tenants we'll work with you. We want you to succeed. We want you to continue to be our tenant, and just trying to be as flexible as we possibly can while working on these different arrangements. For the ones that have not known about this, there was an executive order issued by our governor that prohibits residential and commercial landlords from charging late fees for any late rents for the month of April and May. And also it prohibits landlords from evicting tenants due to non-payment of rent due to COVID in the months of April and May. I believe that that's going to be extended till June, at least June, or maybe even longer, but we don't have that information yet. So we're watching and seeing what's going to happen. When it comes to facility maintenance, I think that the biggest the biggest work or the biggest impact on how things have changed had to do with the office environment again. Office buildings with common areas, common facilities like large shared conference rooms or gyms. Those are the facilities that have been closed and are going to remain closed until we're confident that we can open them. But also early March, we changed the way we clean our buildings, and we went from cleaning the buildings to more so disinfecting the buildings. And additional cleaning is being done to high touch points areas like door handles, elevator buttons, any fixtures in the restrooms, and just anything that is getting frequently touched by the public or by our tenants. Additionally, in office buildings early on, we've posted signs of, if you're sick, stay home, wash your hands frequently. We've installed hand sanitizers wherever we could by each entrance to the building and inside of the building elevators. And we continue with that till about the end of April. And beginning of May, when we anticipated that some tenants are going to be coming back to their offices, we've changed our signage now to social distancing and changed a few things on the signs that were previously posted in the buildings. But CDC has been really great about giving us guidance for our janitorial companies and for what signage that we can post in our buildings just to keep up with some of the rules. Now, big question is about enforcing wearing masks. So several of our tenants have reached out to us in the office environment asking us if we are going to require everybody who walks into the building to wear masks and if we're going to enforce it. And we strongly urge tenants and their visitors to wear masks, but we are not going to be policing people wearing masks. Where we can make that requirement is on our vendors and our building engineers. So we are requiring anybody who works for us, who we hire, that they go into the building wearing masks and gloves if possible to work on our tenant spaces. We've also have communicated again with our tenants, asking them about specific requirements when it comes to doing work or routine maintenance in their offices, in their suites. And some tenants, say, hey, just do work as normal. Others are very strict, where they even post signs on their doors where they say, nobody, janitorial company, please don't enter our suite. Building engineers don't enter our suite until further notice. And walking through my office buildings just recently, even the end of last week, I see the same type of signage still being on tenants' doors. And with that being said, we've watched what percentage of our tenants are working from the offices now. So as recently as last week, we've had anywhere between 15 to 30% of tenants occupying our buildings. And that number just depends on the tenant mix on the building and the services that are being provided. We are anticipating talking to our tenants that early to mid-June, our buildings should, about 50% of tenants should return to their offices, and businesses are working on rotating the employees that are coming into the offices every other day, every other week, but still majority of tenants are going to be working from home. And it seems that there is no plan as to when everybody will be back in their offices. So up until now, the only thing we know about half staff sometime in June will be back in the offices. And that brings other question about what's going to happen with the future and the office environment in the future. So we are definitely entering some tough times that we have no choice but wait and see what's going to happen. With our tenants coming back to the office, I think it was very important to Again, communicate to them what we are doing for them, that we're continuing with the extra disinfecting of common areas, that our filters for HVAC system provide adequate protection from the spread of COVID-19, and just really doing anything and everything we can to make tenants feel safe and comfortable to come back to our office buildings. On a separate subject a little bit that it may be of some interest to you, I've got a couple of tenant improvement projects that I am working on, and just wanted to share with you my experience of that process. So contractors seem to be still very available to come and look at projects that may be coming up on the pipeline. They are very cooperative with getting bids turned around quickly. I've had a great experience with getting my plans, small tenant improvement job, but I had my full set of permit plans done in 5 days, which is very quick as well. Where we are seeing delay is with regional building departments. So they are still working from home, and they're supposed to be coming back to the office starting early June, but it sounds like regional building department is about 4 weeks behind on plan review. So just keep that in mind if you have any tenant improvement projects coming up. One of my colleagues told me that during COVID, one of her tenant improvement projects was completed, but she waited for 3 weeks for the fire inspection, which is always the final inspection on a tenant improvement project. So just keep that in mind, that there are definitely some delays. What's going to happen in the future? What is the next 3 months, 6 months, 9 months going to look like, mostly for our retail tenants? Are they going to be able to survive with the new complications and restrictions on how they can conduct their business? That's a big question. What's going to happen with our office environments? You know, about 15 years ago, working from home was so popular. We are 15 years later, and we have better tools now. We have better internet. We have better ability to work from home. So will the employers decide to keep some of their staff to work from home and reduce their office space? I don't know. I would not worry about their long-term leases yet. I think that there may be reduction in how many employees are working out of the office in the next, maybe even 18 months or 24 months until the vaccine is developed and widely spread. But I don't know that what we're going to see happening here over the next several months necessarily is going to be the new normal and the future of how businesses are going to be conducted. So, we got to sit and wait and just see how things play out. Another concern that was really interesting, and I had it coming from 2 tenants now, a nail salon and a hair salon, actually nail salon and a restaurant, had to do with the unemployment benefits that are currently available. So it is my understanding that anybody who is unemployed now is receiving an additional $600 a week in unemployment benefits. What that creates is employees not wanting to come back to work because they're staying at home, doing whatever they'd like to do, taking some time off, and they are being well compensated, and often their compensation is much higher than what they would be able to earn working. So that's another concern that was brought up to me by some of my tenants. They said, we want to open, we want to continue with our business, but we are worried if we're going to have employees come back and work for us because of these unemployment benefits that are currently out there. So I think the future is going to be very interesting. We are still in reactive mode. We are still adjusting to things as they change. We are starting to plan and try to anticipate what we may see, but nobody has a crystal ball, so we don't really know what's going to happen. So we're continuing to watch and hope for the best and continue to serve our clients and tenants and really try to be there and go through this with everybody else. That's about it.
Thank you for all your expertise and knowledge, collective knowledge, Gosia. We really appreciate it. And I think now is a great time for us to jump into some questions. We've had a number of questions come into our Q&A pipeline here. Chris, the first one's for you. For a sole proprietor, can PPP funds be used to fund a 2020 SCP contribution and be eligible for forgiveness? So maybe you can explain to those of us who don't know what an SCP contribution is, and then explain if that's eligible for forgiveness as well. And it's like you're still on mute, Chris.
Oh,
there you go.
yeah, sorry. I was trying to type an answer to that question, and I couldn't get out of the screen to type the answer. So yes, first of all, an SCP is a SEP contribution. That's a self-employed retirement or self-employed pension plan. Those contributions are qualified. So contributions to retirement plans are qualified payroll expenses for PPP forgiveness. The interesting part is the SBA has not issued any guidance at all around what does or doesn't qualify for retirement. So we interpret that as both good and bad news. Obviously, the bad news is we don't have guidance. The good news is that we think that means that the SBA is allowing for fairly broad interpretation of retirement contributions. So we're advising clients that may include making a 2019 contribution in 2020 and counting the entire thing as part of your 8-week period of payroll costs, and maybe making an advanced 2020 contribution. We're being a little cautious with the 2020 contributions, and we're recommending clients only contribute a pro rata amount, like, for example, through the end of May. So maybe 5/12 of your normal contribution limit, as opposed to contributing an entire 2020 amount this early in the year. I would think that it would be reasonable to probably contribute even 5 months worth of retirement contribution for 2020. But again, with the benefit of also contributing an entire 2019 contribution, if you hadn't already done that, you could end up putting a pretty significant amount of money into retirement and have it all qualify as a qualified payroll expense.
Great, thanks for that explanation, Chris. Let's see here. I guess we've got Chris. We got one more for you here. Can you reapply for the PPP loan if you haven't already gotten funding? Well, hang on here. Gosia, that one might be from you. Can you explain that one?
Yeah, so I was just thinking about my example of the restaurant owner, one of my tenants, where she applied for the PPP loan, received her funding, but she forgot to add tips as part of payroll expense. So if you have already applied and you've received funding, can you reapply knowing that you've made a mistake and there's more money that you could potentially receive?
Yeah, so the answer is yes, you can. In fact, the SBA did issue an FAQ on that particular point and said that lenders could essentially update their loan amount. So that is theoretically available. The problem is going to be the volume, and at least in the early parts of the loan program, I had some clients that were applying in the early days, and people didn't know the rules, so they missed some things like Gosia's example, and then they went back to try to reapply, but their lender was so busy trying to process all these new loans that they didn't have time to be able to redo a loan, or and frankly the lenders didn't know how to do it. So the SBA said it's allowed, but nobody gives any instructions on how you're actually mechanically supposed to do this. So I think that's probably more likely today than it would have been, let's say, a month ago. So I think your best bet there is to contact the lender that you originally did the loan with. I certainly wouldn't go to a new lender. There are some very strict prohibitions against applying for multiple PPP loans. So your only bet is to go back to the same lender. And what we've also seen is the larger the lender, the more likely it's going to be difficult to get that done. The smaller the bank you're working with, the easier it's going to be to get any kind of changes done like that.
Great. Thank you. Chris, one last question for you. How are we to determine what our 8-week coverage period is? And does the 8 weeks start when you're approved or when you receive your funds?
So yeah, that's a great question. The rule did come out that it's the day your funds hit your bank account. So if you get approved and then you need to sign some paperwork and then it takes the bank 2 more days to wire the funds into your bank account. All of that is irrelevant. It's the day that you see that money hit your bank account. That's day 1. And then the SBA is very specific. So it's 56 days. So from that date. Now, here's an interesting separate ruling for payroll that just came out last week. And that is that you can choose an 8-week period that lines up with your payroll cycle if you have a payroll cycle that is 2 weeks or less. So if you pay biweekly or if you pay weekly payroll, if you pay monthly payroll, you don't get this choice, or even if you pay semi-monthly. But if you pay weekly or biweekly, you have the choice of picking your 8-week period for payroll only. You get to pick it within a week or 2 of your loan date. So let's say you got your loan on April 15th, but your payroll cycle runs from April 20th to 2 weeks from there. You can actually shift your 8-week period for payroll purposes only to run from the beginning of your next payroll cycle. So that's a unique thing that you get to do. And what it really does is it allows for people to claim basically more than 8 weeks worth of payroll in their 8-week period, because they're going to get to claim the payments that they made for historical payroll prior to their 8-week period, even though the checks were cut to the employees, let's say during the 8-week period. And then on the back end of your 8-week window, you get to accrue the payroll, even though the checks are going to be cut after the 8 weeks is over. So when you do the math on it, what we're finding is most people are getting to claim 9 and 10 weeks worth of payroll all in their 8-week window. So it's a unique reporting structure that allows basically a little more flexibility in reporting. But for all those other rent expenses and utility expenses, it is a strict 8-week, 56 days from the day that you get the loan.
Great. Thank you, Chris. Gosia, are you seeing any businesses close their doors permanently at this point?
Not yet. Now, following my intuition, I have few tenants that I believe that will close their doors. And, they were always dealing on very, very low profit margins, and specifically restaurants. And with everything that it's happening and with the additional restrictions, I believe that they're not closing yet, but I will be shocked if they continue and stay in business.
Great. And last question, Gosia, for you. Has the CDC issued guidelines for cleaning and sanitizing common areas of buildings and tenant spaces?
Yes. So CDC's website is very informative and it provides good guidelines. Now, something that a lot of people are misinterpreting is that CDC provides guidelines. They don't mandate how things need to be done. They just provide guidelines. So these are recommendations. But yes, there are recommendations for homes. There are recommendations for common areas of offices. There are recommendations for individual offices. So yes, it's very informative, and the CDC's website's got all of that information, and it's really easy to navigate and find.
Wonderful. Well, thank you. And thank you, Gosia. Thank you very much, Chris, for your time. And I want to thank our attendees as well. And all of our SCCB board members. And from there, I will turn it over to our board president, Chris Myers. Thank you.
Thank you, Logan. And thank you to everyone that joined us on our webinar today. Definitely want to thank Chris Blees with it's BiggsKofford Capital, as well as Gosia Bikker with MC Commercial Brokers. Thank you again for joining us. Today's webinar is going to be available on our website, so if you did miss it or want to go back, it'll be available on our website hopefully this afternoon. Go ahead and save the date. So we do have June 15th. We tentatively have a luncheon scheduled. We'll have a great speaker there, as well as we have our annual August 17th golf tournament, which is going to be a great time. So definitely get registered for that. Time to get outside and have some fun. If you want any more information about the SCCB, about our upcoming events, programs, and sponsorship opportunities, feel free to reach out to our website at mysccb.org or .com, or you can reach out to any of us board members. And thank you again for joining us today.
Thank you all.